In business, oil prices rising about 3%, with Brent futures touching a one-month high, as with fears of prolonged U.S. blockade of Iranian ports, throttling energy exports from the Middle East region. Brent now trading around $114 per barrel, WTI at $103 per barrel. Investors taking into account the impact of the UAE's withdrawal from OPEC and OPEC+. Let's bring in Ole Hansen. He's head of commodity strategy at Saxo Bank, speaking to us from Copenhagen. Mr. Hansen, if investors are factoring in the UAE's pullout from OPEC effective on Friday, that suggests that they think rather more important that continued blockade of the Strait of Hormuz.
Good evening. Yes, I would say 100% that is the continued focus in the markets. No doubt that the announcement yesterday was a bit of a surprise to the market, but as you also in the previous clip here talked about, that there has been some internal strife for a while between Saudi Arabia and UAE, but most certainly right now what the whole world is watching is the Strait of Hormuz, the blockade where no ships coming through, and with that on a daily basis we just see crude prices continue to grind higher. Refined products are trading at even more stressful levels, and that is the immediate impact. And the announcement from OPEC or from the UAE yesterday is probably more a long-term potential, or potentially having a longer-term impact, but not in the short to medium term.
The longer term is on the hope or the expectation that war ends, traffic resumes to the Strait of Hormuz, and that the UAE can then step up production to meet all those depleted reserves. But we still need to see the Strait of Hormuz opened.
That is absolutely correct. So until then, it's really only just guesswork how long and how deep this crisis is going to be. But I think also what it's worth noting is that when the Strait finally reopens, any barrel that can be produced will find a buyer quite easily. So that basically also due to the fact that there are production shut-ins that could take time to recover. We have damage to facilities in the area as well. So the fact that the UAE, if they can raise production relatively quick and relatively fast, it's not going to have the negative impact on prices that we would have seen if this had been announced just 6 months ago.
Well, right now it's obvious demand exceeds supply. But in the circumstances, and there are many, when supply exceeds demand, that's when OPEC as a cartel serves its function. With the UAE pulling out and potentially others also pulling out, does OPEC lose a lot of its firepower?
That's exactly the speculation that we are seeing and hearing about now. Simply because together with Saudi Arabia, the UAE is really the only two countries with available capacity to increase production. But they're only also the number 1 and 3 producers. So they have been supporting the attempt to stabilize prices in the last few years, where we went through quite a big jump in non-OPEC plus production growth, and they stepped in by cutting production and then slowly putting them back into the market last year. But their role as a caretaker, you could say, of the oil market, to basically trying to ensure stability and a relatively stable price, that will become more difficult going forward. And the risk is obviously that everyone will look more on their own individual finances and production levels and say, well, we want to increase and maximize our production. So that will be the focus when we get on the other side of this crisis, and when we eventually have global stock levels, commercial and strategic, rebuilt back to levels where potentially supply starts to meet demand more easily.
We heard earlier from our correspondent, the UAE has tried to be reassuring. It said, despite its withdrawal, it will continue to coordinate on oil prices. What kind of coordination do you expect to see from Abu Dhabi?
Well, I think in the short run, no coordination, because I think in the short run, even Saudi Arabia, if they have the ability, would be able to or should increase production because the market is basically very hungry for these additional barrels. So the question is really, when we get to the point where we get a more balanced market, if they, by signaling what they're saying there, basically wants to be part of part of the solution, not being the problem, i.e. that they raise production into a market that is not struggling to cope with it, then obviously there will still be some kind of a cooperation. But they basically just wanted to get rid of the straitjacket that they've felt they've been wearing now for a few years, and we also seen as a result they've been producing more than their quotas, and that has also at some time, I'm sure at moments, been given some problems between both Saudi Arabia and the UAE. So it is a good sign that they potentially that they're looking at that, but also I think we're not going to see in production from one day to the next jump by more than 1 million or 2 million barrels. This takes time and still billions of dollars of investment to reach their potential target of around 5 million barrels a day.
Oh, thanks so much for joining us this evening, Mr. Ole Hansen, Head of Commodity Strategy at Saxo Bank. Speak to us there from Copenhagen.